The oil ministry is making a case that local gas prices, they need to go up now because globally also gas prices or natural gas prices have inched up. Is there a case for that? Let's discuss this with Mr. S.C. Tripathi, former oil secretary, who joins us live from our Mumbai studio. Mr. Tripathi, good morning. Thank you for joining us.
Thank you.
Are you surprised with the comments which have come from the oil ministry that local gas prices, they need to go up?
You know, I don't understand why the petroleum ministry since 2006-7 is moving further towards controls and going back on reforms. I think it is not a good idea. It will make the situation very messy, difficult to implement. How do you make averages of $2, $4.2, $6, $10, $12, $16? Secondly, under which law is government going to control the price? In fact, the regulation, the law says that it is the regulator, the PNGRB, which will be looking into the cases in case there are unfair trade practices. PNGRB also not in each and every case will upfront declare the price, but will look into the case if there are unfair trade practices. So I don't think it is a good idea. What the government should do is to only, enter the market through its own government companies and look at the price at which the government companies sell, that also through their boards, and to whom they sell. The government's concern is about fertilizer and power. Fertilizer is a price control commodity, so primarily the government companies should sell to fertilizer companies, and power will take care through their regulators. I don't know why they are going into this kind of thing, more controls, messy, and it will not really, in my opinion, not likely to succeed.
What about the quantum of high? Because it's pretty much talking about doubling prices from here.
Well, they can, they can raise the prices of gas produced by the government companies, that is ONGC and Oil India, because they were given fields on nomination basis. These are old fields, and there they are not getting remunerative prices. They are getting around $2, $2.5 or close to like that. So there, if the costs have increased, they can raise. But about other fields, they should let the parties negotiate directly with the consumers. And if there are any unfair trade practices, the PNGRB is there in the picture. Why should the government intervene? And, if the government intervenes, then somebody will again go to court and some strange decision will come there which will affect the entire sector. So it should be more through the regulators than through the government and through the courts.
Okay. Let me also encourage Mr. L. Mansingh, former chairperson of PNGRB, to join in. Mr. Mansingh, good morning. Good to have you back on ET Now. What are your thoughts, Mr. Mansingh? Do you think gas prices or local gas prices, they need to be doubled?
No, as Mr. Tripathi mentioned, under the PNGRB Act, there is absolutely no provision for either the government or the regulator to tinker with the prices. What is very specific is the mandate given to the regulator by the parliament, that is to ensure a competitive gas market. So the primary concern should be that price should be discovered in a competitive gas market and should not be determined either by the government or the regulator or by anybody else.
Right. What happens from here? What's the procedure from here, Mr. Mansingh, in terms of whether or not the government can actually, or the ministry can actually go about implementing this price hike? What is the procedure you think would happen from here?
No. There are two parts to it. You have right now something to the extent of nearly 50% of the gas being consumed in the country coming through the LNG route, that is at primarily two rates, contract rate and spot rates, and that is not regulated by the government or anybody else. So that is a market determined price already existing in India. It is the D6 Reliance gas and the other gas, APM gas, controlled by the government, where the price is a factor. At what price it is to be allocated to the allottees as decided by the government. So that is a issue which the government should again allow the market forces to determine, rather than allow government on the basis of some formula to determine, because that will essentially distort the market. You will not allow a competitive market to emerge if government continues to tinker with both prices as well as allotment of the gas.
Mr. Tripathi, do you think there are some lessons to be learned from the Reliance and NTPC case?
Entire NELP has been turned upside down because of the decision of Supreme Court in that case. That is, the NELP said that the operator share is for operator to control, operator to market, operator to price. Now, the judgment in that case says that the entire gas belongs to the government. In fact, all natural resources belong to the government until they reach the end consumer. Fortunately, this judgment is not being applied to bauxite, iron ore, coal, etc. Otherwise, there will be chaos. But even in case of natural gas, it has created lots of difficulties that we see why Reliance is not pumping out as much gas as perhaps it could, or it has been doing so in the past. And secondly, because then there would be disputes if the government intervenes, and the matter will go to court. So if the regulators are specialized agencies, they are set up only for this reason, that they know the sector and they will regulate to bring in a competitive environment rather than an individual case going to the courts and coming out with decisions which will impact the entire sector.
Mr. Mansingh, some would also argue that if gas prices are not increased in India, that will, in a sense, not help private sector entry, because the Indian gas prices are so low that it makes little sense for any private player to invest into that business.
It has already happened. I mean, it's not a question in future. The exploration and production has very adversely been affected. The NELP rounds, the past one or two rounds fell flat on their face. So unless and until you allow a competitive gas market to emerge as envisaged in the PNGRB Act, you will have a long-term damaging effect on the Indian economy.
Mm-hmm. Right. Mr. Tripathi, come to you. What does this mean really for ONGC and Oil India? While you've spoken about how, now they can, of course, they need to hike prices and, that will support their business. But over the long term, what would these guidelines being put in place mean for their business?
I think government should restrict itself only to ONGC and Oil India, because they were given some fields which were on nomination basis. So there was no actually price for those fields. And those were historical cases, and gas production is continuing from those fields and is reasonably low. So there is a case. There is a case for raising the price of gas. But as far as gas prices are concerned, well, I may also inform you that in US the prices are close to $3. So it is not that uniformly all over the world prices have gone up very high. In US, because of discovery of shale gas, the prices have come down. And the reason for that was that at one point of time, the prices had gone up to $7, $8. So it became remunerative for shale gas exploration to take place. So similarly, the market will find its own level. And government should control only if it wants to control because of its concerns for fertilizer and to some extent power, mainly fertilizer. So government should control only the government allotted gas fields to ONGC and Oil India, and there is a case for reasonable increase of prices, because there the prices are still quite low. So from 2.5 they can go to about 4.2 or something like that.
What about Reliance, Mr. Tripathi? Reliance is making a case that
I don't know about Reliance, because one has to also see what is the agreement between Reliance and what is the Supreme Court judgment, and what is the formula the government discovered mutually in consultation with Reliance, and what is the period. I understand from what I read in newspapers, I understand that period will be over in 2014. So when the period is over, if there is a legal binding to follow that formula up to 2014, both Reliance and government should get together and see how the revision can take place effective from 1/4/2014. And if legally it is permissible, then it should be allowed to be raised even now.
Final question to you, Mr. Mansingh. A lot of market men are excited after the comments from the oil ministry that gas prices will go up. Do you think it's too early to jump the gun, and fund managers and market players, they should consider facts before believing on some of these comments?
No, let me tell you something. The competitive gas market is in the interest of everybody, particularly the Indian economy. It is going to benefit everyone, including the producers, the gas companies, the consumers, everyone, because there is a huge demand-supply gap for gas in the country. The gap is widening as gas infrastructure is expanding. So the only way out of this situation is that you allow a competitive gas market to emerge. The regulator is already in place. Allow the regulator to regulate the market as it is intended to do under the PNGRB Act. And if that happens, you will find that much higher volume of gas will come into the market through imports. LNG terminals would be set up. Many terminals which have been announced but have been deferred because of this uncertainty about the price. They will come up on even on East Coast where there is not a single LNG terminal. So it is going to benefit everybody. So I don't know why market should be apprehensive. It is to benefit not only the oil and gas sector but the entire economy.
Right, Mr. Tripathi, there is opinion in the market that these gas prices are being hiked to make the Oil India's offer for sale more attractive, and diesel and gas price hike will ensure good response. Do you agree to that?
Well, yes. I mean, that goes without saying. I don't know about the follow-on public offer and things like that. But of course, Oil India and ONGC will be beneficiaries. But this will be for some time, and thereafter government knows how to take money back, either through a very high level of dividends or through maybe the government may come up with some windfall tax or something else. Because government's fiscal position is quite bad. And there are many ways by which now government is trying to take money back from the PSUs, either through high dividends or through taxation, or forcing the PSUs to invest, which is not a bad thing. In fact, I would suggest that Oil India, and more than Oil India, much more than Oil India, ONGC should go around the world, make investments in all those areas which are rich in hydrocarbons, because the energy needs of this country are going to be very large. And we domestically will never be able to fulfill that.
Mm. So if the former oil secretaries of the view that if ONGC and Oil India will make more money, government will only take it back, it means that we will never have strong oil sector reforms?
Because the government is so dependent on oil sector. Government, both central and state, collect nearly 250,000 crores of rupees by way of taxes. And I suppose also dividend. So they are so, and it's an easy way out, because just catch hold of 6-7 directors of finance and get the money. So the government will have to cast its net wider and raise its tax base, also have a broader revenue stream. Then oil sector reforms can go forward much better. But in case they are raising the price, this will benefit ONGC primarily and Oil India to some extent. But my point is that this should not be taken back by government, but ONGC should go outside India, make investments like the Chinese companies in all those places which are rich in hydrocarbon resources, whether they are Canada, whether they are Mozambique, Angola, Australia, or Latin America, and make sure that energy security is ensured.
Right, Mr. Mansingh, come to you. Just one final word as we wrap up the discussion. What do these measures really mean for what may come by for the oil and gas sector in the budget? I mean, do you expect a greater push or more initiatives being taken, particularly to bring about more interest from foreign investors to the sector?
No, unless the government gets out of this market and stops tinkering with prices allocation, I don't think there will be any big ticket investment in this sector. So you need the funds desperately, you need technology desperately, because you are getting into deep water production where our both technological capabilities and experience is limited. You need huge amounts of money for infrastructure for transmission and distribution of gas. All this is not going to happen unless and until you allow a competitive gas market to emerge. Let me also mention one point. Any price rise of gas on the basis of whatever formula, the biggest beneficiary is going to be the government directly, because the share of the profit gas in the kitty of the government, in terms of those which are been licensed under the NELP, they come to the government. There is nothing that prevents the government to subsidize to whatever extent the fertilizer sector if it wants. It will be in conformity with the general reform process that you are adopting direct subsidization rather than this indirect subsidization of keeping the gas prices low.
Fair point. Gentlemen, appreciate your time. Thank you for your insights.